One of the greatest benefits of the interconnectedness of digital technologies is the potential ability to bring together data from myriad sources in one place for its effective use. In the world of financial services, cutting edge technologies and the disruption introduced by on demand aggregators and marketplaces has brought about a shift in consumer expectations of speed, safety, security, and convenience. These changing customer expectations have led to the emergence of the concept of account aggregation. Hello, everyone. Welcome to the Analytics Insight podcast, where we talk about the ever evolving tech space. And I'm your host, Priya Diyalani. In 2021, India unveiled the Account Aggregator Network, a system for sharing financial data that has the potential to revolutionize lending and investing by granting millions of consumers greater access to and control over their financial records, as well as increasing the potential market for leaders and fintech firms. Yet it remains widely misunderstood. While most conversations reduce account aggregation as data sharing, the real value lies much deeper in data usability, orchestration, signal extraction, and automated credit journeys. Joining us today is Nikhil Kurhe, CEO at Finarkein, to unpack what the account aggregator ecosystem actually enables today, the misconceptions that slow adoption, and how BFSI institutions are using consented data in real workflows. Hi, Nikhil, how are you doing?
Hi, Priya. Thank you for having me on the podcast. And I'm doing good. And I look forward to our conversation.
Great. It's a pleasure to have you on a podcast today, Nikhil. And of course, we are going to unpack more about Account Aggregator. I think it's one of the most least discussed topics when it comes to its usage in the financial landscape, and how it is, it's the next wave of innovation, driving more intelligent infrastructure and analytics. But before we dive deeper into our conversation, let's start by telling our listeners more about Finarken. So, if you could give a brief about the company, its specialization, it would be great.
Sure. So the company is around 6 years old now. And we started in 2019. Our primary focus was around the open finance framework that had been notified through India's central banking regulator RBI in 2016 2017. And what really excited us about it was that access to financial data was essentially getting democratized in a tech first, machine readable first, API driven ecosystem. And we were very excited by that fact that when access to financial data gets structured, democratized, the kind of velocity and the personalization of financial products in a market like India, which is very dynamic, very diverse, will significantly take off. And we were naturally coming off the highs of the UPI ecosystem and seeing the success of UPI and other initiatives that NPCI had brought and has continued to bring in the payment space in India. So combined with all of these factors, Finarkin decided to build a data company focused on the financial services ecosystem. Today, we are in the business of providing access to financial data through consented rails, which are compliant with the latest Data Protection Act in India. We also help our customers make sense of the data coming in through our intelligence offerings, which include first party offerings wherein we have built the data intelligence and analytics modules ourselves, as well as third party offerings and products which our customers have built or co-created on our platform as well. And lastly, we also have helped our customers with embedded finance opportunities and distribution, wherein the kind of products around wealth, insurance, credit that financial institutions across the board offer today. How do you make sure that that reaches the right customer? So that's the broad spectrum of what Finarkin offers today.
Thank you for that insightful overview, Nikhil. And it's always fascinating to understand the core vision and strengths that drive an organization forward. Building on that, I would love to dive a little deeper into your personal journey within the company. Every leader brings a unique perspective that shapes the way innovation happens. And I'm sure our listeners would love to hear about your role and the impact that you have been able to create. So it would be great if you could, tell us more about yourself. How has your journey been till date, and what exactly is your role at the company today?
So, I by education I am a computer science graduate from Pune University, and post my engineering degree, I joined as a data engineering in a business intelligence company here in Pune, and I worked there for a couple of years building out scalable data platforms for the aerospace and defense sector. And along that journey, I was dealing with a lot of data at scale. And when I saw that new regulation was coming, specifically around how financial services and how data in this ecosystem is going to be shared through an open finance framework, which has now become the account aggregator ecosystem. Me and my colleagues, we were excited that there is an opportunity to sort of build the ecosystem, the platform that Finarkein has been able to offer today. So that was the idea. And today at Finarkein, I have come a very long way from being a data engineer and working on tech primarily and data primarily, to now looking at hiring, making sure we are able to find the right people at the company, and making sure that people are excited to come and work with us. And I'm very glad to share that we would have probably one of the best retention rates in the country for sure for a fintech that has been around for 6 years. Today, our team size is about 105 people or so, and I can proudly say that we would have had probably less than 10 people, leave our company over these 6 years. I am also looking at business development. So making sure that we have the right customers, the right enterprises who are willing to work with us. As in financial services, it is a business of trust, and large enterprises who have been around for decades, if not centuries, want comfort that this small startup, which is offering a critical infrastructure, is stable, has staying power, is financially capable to service a large enterprise like a bank or an NBFC or a fintech. So making sure we are present and we are with the right customers, that's also something that I look at. And then lastly, I'm also making sure that we are well capitalized, well funded, with the right investors. Glad to share that we have some very great tier one marquee investors on our cap table today, who have also helped us, played a role helping us get this far today. So broadly, these are my core responsibilities where I'm working on hiring. I'm looking at sales and engagement with our key customers, and subsequently, dealing with capital and our finances.
Thank you for sharing that, Nikhil. And I mean, I'm really glad and impressed to hear how your leadership translates vision into a more real and measurable outcomes. Now, let's move to the broader landscape, Nikhil. Now, an individual or an entity's data is usually fragmented and spread across silos in data warehouses of financial institutions and other business entities. So there are no frameworks for seamless, safe, and swift data sharing between financial information providers, FIPs, and financial information users, that is FIUs. And you need the permission of the user whose data is being shared. At the same time, there is a lack of solutions and services to aggregate and integrate this user data for a seamless, wide ranging view of data in real time. So, when we talk about account aggregator, it is often reduced to a data sharing pipe. From your perspective, what is the biggest misconception about the account aggregator ecosystem today?
Sure. So I would say the account aggregator ecosystem is definitely more than just a data sharing pipe. It is fundamentally the baseline or the benchmark for how effectively data sharing in the country is going to work going forward. From a consent management and a compliance point of view, I would say, especially post the Data Protection Act, the role and significance of account aggregators is only set to further, scale. And additionally, we are seeing very early signs of regulators, let's say beyond financial services, also keen on replicating the same model for their particular sector. So data beyond financial data will also be part of the account aggregator ecosystem in the near future going forward. And we are seeing entities like GST network as well as the Department of Revenue, and which will help us bring the income tax return data sets to the consented data sharing framework, which is the account aggregator ecosystem. So definitely, I think one of the myths that I want to bust for sure is that the AI ecosystem has fairly matured. It is still obviously expanding, and we have barely scratched the surfaces with respect to the kind of use cases we can build out. But it's exciting, it's mature, and very large enterprises, which includes the largest banks, fintechs, are today live and operational on the account aggregator and are seeing meaningful business values and outcomes. In fact, large enterprises like Bajaj Finance Limited have mentioned in their quarterly earnings the impact that they have seen through the adoption of the account aggregator ecosystem. So it is a growing but business outcome and value wise matured ecosystem with still a lot of leg room to grow.
Definitely, and thank you for breaking down that so clearly. I think a lot of people underestimate the level of intelligence or governance that actually powers the account aggregator framework, and your perspective really helps spotlight that. And what you said also brings up an important point about how account aggregator ecosystem isn't just about moving data from point A to point B. It's actually enabling a completely new way for individuals and businesses to participate in the financial ecosystem safely, transparently, and with far more control than before. On that note, I would love to take this a step further and understand that because the account aggregator framework is transforming how we are sharing financial data across India with the consent driven, secure, and real time access to verified financial information. Institutions can now build faster, more inclusive, and data driven services. So, I think it is powering a wide range of innovative use cases across lending, investments, insurance, even personal finance. However, many assume that account aggregator only helps lenders. What real workflows and use cases are emerging across different industries like insurance and banking or wealth management for that matter?
Yeah, so I would say while credit is definitely been one of the early beneficiaries of the account aggregator ecosystem, from a end user impact point of view, I would say honestly wealth has a better, more visible impact because let's take the case of financial advisory. In financial advisory, if you want effective advisory, you really need to provide a complete overview of your existing financial footprint as well as what your individual spending habits or financial goals or aspirations tend to be. So matching the right customer profile, their historical holdings with the right financial product from a wealth investment point of view, this process has been significantly simplified. And a lot of new like if you look at how the venture funding landscape has also evolved in the financial services category, suddenly companies building in the wealth space have become very attractive. But partly I would say the technology aspect of it has been powered by progresses in the account aggregator ecosystem. So that's definitely one area. I would say insurance as a category has still been relatively slower to adopt and roll things out, but we are also seeing a very good momentum with some of the large private insurers towards the end of this financial year, wherein they'll be rolling out some very new initiatives which are powered by the account aggregator framework. So I think across the board we will see a healthy adoption going forward. And lastly, I think one pocket which we have still not seen extensive usage is that banks have not really leveraged the account aggregator very extensively because for various operational reasons. But the next financial year will be the year wherein we will see most of the large banks also fairly aggressively adopting the account aggregator ecosystem.
Definitely. I think, of course, initially the lending landscape, the lending vertical was at the forefront of adopting the account aggregator framework. But I think now it's quietly transforming every corner of financial services. So, of course, we will see that happening gradually and slowly, and the use cases will clearly expand as and when people and the institutions are well adopting this new framework and explore or open up new possibilities for innovation. I think it will start fueling not just better decisions for enterprises. I think it will also deliver more tailored and more controlled solutions for users themselves. So the shift is definitely two-sided. We will dig deeper into as we move forward. Now, the building blocks of the account aggregator infrastructure are in place today with nine licensed account aggregators and 700 plus institutions in various stages of becoming an P and FIU. Early use cases also have shown some promising results, especially in customer onboarding without document uploads or investment portfolio analysis for wealth advisors and so on. However, despite the integration of account aggregator by various stakeholders, the adoption has not been a runaway success. I mean, conversations with the industry also indicate that the banks have enabled a few use cases but are not very eager to rapidly expand. And that's what you also said. So I think most of them seem to be in a wait and watch mode. So, what do you think is actually slowing down the adoption of account aggregator inside large BFSI organizations?
Yeah, I think the answer there primarily lies in how the ecosystem has come about. I think the ecosystem adoption has been a flywheel where you have demand and supply. The supply is from entities like manufacturers of financial products, banks, insurers, repositories, or custodians like an RDA who are providing the data sharing pipes today. And then the demand is naturally coming from entities who want to use this financial data to drive customer acquisition, onboarding, underwriting, collections, and so on. So across the board, the adoption has happened, but it has not been to the extent we've seen. Let's say UPI or some of these other digital public infrastructure initiatives which have been runaway successes have been. The root cause here is, in my opinion, how the incentive structure around the ecosystem has been defined. The manufacturers or the entities who are sharing the data today are fundamentally not getting compensated for the infrastructure and the cost involved to sort of share data, and in turn subsequently the quality of data or the success rates or the uptime has not been as high as, let's say, 99%, or from a enterprise who wants to move critical functions on the account aggregator rails perspective, the numbers or the quality of data do not instill that confidence where if the customer is even facing some sort of minor drop off or the quality of data is not up to the mark, the journey does tend to break. And lastly, obviously, the customer acquisition costs in financial products tends to be very high. So to bring the customer to a particular journey and an endpoint where they are providing their financial consent, and if there is some technical issue or a glitch, that then becomes a very expensive loss or a proposition for any financial entity. So I think that has been one of the key reasons which has held back adoption. But we should, see some of these bottlenecks unblock in the coming financial year as discussions are underway within the industry to drive, fairer and better incentives for all participants.
Yeah, definitely. And I think we often talk about AI and advanced analytics as, they can simply be just plugged in. But I think the real transformation happens only when the foundations are in place. And of course, like we discussed, the challenges aren't just technical. I think they're even operational and structural because large BFSI organizations have decades of legacy systems and risk frameworks, so change naturally moves slower. And at the same time, I think the pressure to innovate has never been higher. So moving ahead, when we're talking about these challenges, when we talk about AI and especially in the financial services sector, I would want to pick up on the landscape of insurance where fraud detection in underwriting has become increasingly critical. The potential losses, stem from fraudulent activities and they not only impact on insurers' financial health, but also erode customer trust and damage damage brand reputation. So, this challenge has definitely urged insurers to seek solutions that leverage technology, especially AI, to enhance their underwriting processes. What role does AI play in turning account aggregator data into real-time decisioning, especially for underwriting, fraud, or credit line automation?
So in the insurance sector, depending on the kind of product that is being purchased and the ticket size, usually insurance is business of probability, right? So insurance works on the basic fact that what is the likelihood or the probability of an event to occur, and what is the net present value of that outcome priced fairly from a risk perspective today. And also it's a fundamentally an assets liability balancing, wherein the premium or the funds you're collecting, you are actively investing and deploying those funds to generate an alpha for the company to sort of make sure that when some of these events or outcomes occur, there is sufficient liquidity in the system. In turn, a lot of the risk sharing is sort of covered by working with reinsurers. So generally, reinsurers which are operating in multiple geographies across multiple insurance products tend to aggregate and consolidate and also balance out risk across the portfolio that of insurance companies they're working with. And the reason I'm getting into all of this is that the underwriting policies at insurers typically tend to work very closely and in tandem with what let's say a reinsurer would have comfort with respect to the kind of data and the customers being underwritten. And usually what this means is that above a certain ticket size of an insurance product, a insurer as well as a reinsurer wants additional comfort that this individual has sufficient financial wherewithal to sort of purchase this product, right? So this includes obviously income and additional factors which typically tend to be proprietary for different insurers and their underwriting teams. So the account aggregator framework here plays a critical role in the sense access to this data and the ability to derive the right signals and informations that bring that comfort to the underwriting teams as well as the reinsurers teams is something that is largely been unique to the Indian market. So insurance in India has been very data driven, and I would say for sure compared to some of the other Southeast Asian and APAC markets which I've seen, insurance in India, while we all like to say insurance companies are laggards from a technology adoption perspective, I would still say insurance in the Indian market has been very data driven, and the account aggregator ecosystem has had a role to play in making that happen.
Definitely. And I think what you just explained about underwriting and the role of account aggregator framework, I think it really highlights how crucial speed and accuracy have become in today's lending ecosystem. And of course, AI is not just accelerating decisions, it's also bringing a whole new layer of transparency and risk intelligence that traditional systems simply couldn't offer. And now with the account aggregator ecosystem, I think we will be adapting to systems, to the newer systems, and learn on the go, and see how it is not just a static repository but empowering more real-time decisioning systems. And I think this also opens up an important discussion around trust, because while the technology is powerful, institutions still need to ensure explainability and compliance and fairness within the AI-driven workflows. And with the account aggregation, I think data security is a major challenge because hackers can obtain unauthorized access to an account aggregation site and steal and use confidential information to perform a transaction or engage in other fraudulent activities. So I think this abundance of personal information of users and financial accounts can offer, make them a single point of failure and vulnerability as well. So, how do you think institutions should think about privacy, transparency in as the account aggregator driven automation scales?
Yeah, so a slight correction I would say there is that the account aggregator ecosystem is one primarily read only. So what that means is once a customer, let's say, links their bank accounts with a particular account aggregator, they are only offering permission to pull data. There is no push transaction, so you can't initiate any payments, you can't change beneficiaries or do any action apart from pulling data from an account aggregator. So that as an attack vector is just technically not defined as a part of the A framework today, as we already have different payment rails for pushing transactions and linking of our bank accounts and things like that. And secondly, the other bit that you mentioned around how data would get centralized and it becomes an attack surface for hackers. Again, the encryption standards which are defined are globally accepted, best in class encryption standards which are being used, so that the data exchange which is happening at source, let's say from a bank to an FIU, which is, let's say, another regulated entity like a lender or an insurer, which is requesting the financial data. This transfer of data is happening in an encrypted fashion end to end. Intermediaries, including the account aggregators themselves, are data blind and are unable to decrypt the data. And the credentials to decrypt the data are only with the regulated entity. But you're right, once the data is there with the regulated entity and they choose to decrypt and, build something around it, that data then was sourced for a specific consent and a specific purpose. And the de facto compliances around data purging, cleanup, and auditability is something that our regulators and obviously industry participants, our customers, take very seriously. And as intermediaries like Finarkein, we also have a very critical and a serious role to make sure that the best practices in data security and privacy are being followed. Privacy has been one of the core pillars for Finarkin. We are the only player in our category that offers a complete in-memory processing along with novel technologies like federated learning, which allows us to build our products and offerings in a privacy preserving manner.
Definitely, and thank you for that correction, Nikhil. I think it gives a better idea about how the account aggregator framework actually works in terms of data management and data sharing. And eventually, I think privacy and transparency aren't just good to have principle anymore. I think they are shaping how organizations can build trust at scale and shifting from more reactive compliance to a more proactive responsibility. And I think we are talking about a shift where we are not just talking about governance, but we are talking about actual accountability. One last thing, I think with more developments in technologies, I think account aggregator solutions can deliver meaningful inclusion and can potentially evolve to larger use cases. What innovations do you anticipate in the next 3 to 5 years, and how does the future look like according to you?
So I would say we should definitely see more AI driven innovations in this category. But I think the key here is going to be the breakthrough will come from companies who are able to build it with the right guardrails and in line with the current regulations as well. Right. So naturally, finding that right balance has not been easy. And a lot of the enterprises and regulated entities in the category who are large incumbents have taken a fairly conservative approach as this technology emerges and evolves and matures. So this combined with the pace of research and new development and innovation that is happening across the board, all of these things are setting in motion, I would say, like a arms race of sorts to drive net new use cases. And what is new a couple of weeks or a couple of months back is already increasingly getting outdated with the kind of capital and the smartest people working at it. So I think we will see some innovations there. The other development that I definitely see happening is that data beyond financial data will also be coming onto this network. And increasingly, while it may not have as large as a consumer brand that like UPI has, wherein a lot of the adult population today is aware of what UPI is and what it offers, I would say account aggregator as a technology will also make its progress as it comes up more and more daily in our lives as we interact with financial products. And a broader superset would be like as we provide consent to share our data, we will also be naturally reusing some of the consent framework and structures that the account aggregator ecosystem has piloted in this category. So that's some of the upcoming changes I see in the near term future.
Definitely, I think account aggregators are transforming the financial industry by providing a more convenient, secure, and a transparent way to manage financial data. As a result, the financial entities and other entities are increasingly partnering with institutions to streamline their operations, improve their offerings to customers, and also enhance the financial crime prevention capabilities. I think while there may be some limitations currently to account aggregators, their benefits are significant and they are undoubtedly changing the way we manage our finances. Well, thank you so much, Nikhil, for taking out the time and effort to be on our podcast today and helping us understand that as the adoption of account aggregator framework deepens, more institutions will tap into its potential to reduce friction, enable inclusion, and build more responsive financial services. I think all the use cases that we discussed reflect just the beginning of what's possible with trusted and consented data access. Thank you so much, Nikhil, for your insights. It was lovely chatting with you.
Yeah, no, my pleasure. And I look forward to seeing how the podcast is received. Thank you for having me. Thank you.
Thank you so much, Nikhil. So, this is for our listeners. I hope you enjoyed today's episode and discussion around account aggregators. Stay tuned for our upcoming podcast. Meanwhile, you can view all our previous podcasts on Spotify and other leading platforms. Thank you so much.